One of the great things that the IRS offers is installment agreements or payment plans, if you will, where on a monthly basis, they'll take a fixed amount so that you can pay off your debt over time. Up until several years ago, that limit that you could do this for was 50,000. But then they were looking to try to really bring in more money. They increased that limit to $250,000 that you can put on an installment agreement. That's amazing. And I highly suggest you take advantage of it. But I'll give you a warning. If you wait till the IRS assigns a revenue officer to your case, you lose the ability to do the $250,000 installment plan. You'll be limited to a $50,000 installment plan, and you'll have to disclose all your assets to the revenue officer before you'll get approved. When you disclose your assets, he might reject your installment plan and instead demand that you liquidate assets to pay your bill. So it's far better that you take the initiative instead of making the IRS come after you. It won't be pretty. When you're on an installment plan, you are still subject to penalties for like failure to pay your taxes on time. There's still a penalty. That's 0.25% penalty, lasts for 3 years or until the debt's paid. The interest that they charge you will be the prevailing funds rate plus 3%, I believe. If you have been charged because of an audit, you have been charged interest on unpaid amounts, and now you got that in a payment plan, then that interest will not change once you're in an installment plan. It's just part of the total amount that you owe. The monthly payment plan that you can set up with the IRS typically is going to last for 72 months. In certain types of plans, it's 84 months. But fundamentally, the amount you pay has to pay off that debt in that amount of time. And the amount they pick should do that. You can always pick a higher amount, but you can't really get lower than that amount. What's that amount? Take the amount and divide it by 72 or 84 as appropriate, and you will see the total amount that you would need to pay. Round that up a little bit for interest, and that's the monthly amount you pay. Now, one way to lower your payment amount, one is to make a large bonus payment. IRS takes money anytime. There's no problem. You can give them an extra payment if you get a bonus. Just pay them. And then at that point in time, you could, if it's significant enough, you might consider renegotiating the amount of your payment to maybe stretch it out further. The IRS, they're not going to extend it indefinitely because there is a statute of limitations on collections. If you owe money to the IRS and the IRS hasn't collected it within 10 years, then the debt is forgiven at the federal level. So that's really big. So the IRS is very focused on getting those debts paid off. So they will not do an installment agreement, which extends a particular debt beyond that 10-year window. The IRS is very easy to understand if you have a payment problem. They just want money. They might let you set up an installment plan, but anything that involves giving them money, they're happy with. You want to give them an extra $1,000 this month because you got a bonus? No problem. They're not going to penalize you. They don't penalize you for paying off your debt early. They just like money. And if you don't have an installment plan, rather than doing nothing, I'd highly recommend you send in, at least $500 a month or whatever is appropriate, just to show your good intention to pay off your debt, even if you don't have an installment plan in place. I do know people, they're choosing that route to pay because to go into an installment agreement might cause them to expose other issues that they have. So one strategy is, I got debts for 4 years in a row. I haven't paid these debts. I want to pay my money on my debts, but I'd rather pay the most recent years, not the oldest years. Typically, IRS would apply the money to the oldest years. So if you just make manual payments for the current years, then the older years, that debt might expire. There's a statute of limitations. If a debt is uncollected after 10 years, then it is forgiven. So some people use that to pay their current debts, but not the old debts. If you set up a payment plan with the IRS, that money automatically goes to the oldest one. That's how the IRS protects themselves from that aging. But if you're doing a manual, I call it a manual payment plan, then you can keep that from happening. So by paying the particular year that you're interested in paying off. So lots of little strategies and tricks, but ultimately you should pay your taxes. And you should pay it with the money you make each year and not go into installment plans unless you absolutely have to. One person asked us, they're on an installment plan with the IRS, and they're wondering if they're still at risk for the IRS seizing assets and doing other aggressive tax collection moves. Well, the answer is no, they can't do that. As long as you are current with payments on your installment agreement, then they will not come after you. Hey, look, these guys have better things to do, all right? And they're overworked. They're going after people who don't pay anything. So as long as you're paying something, you'll make a revenue officer happy. So keep paying. You ignore them once, twice, and all hell's going to break loose. Revenue officers can come and they can seize assets, seize extra cars. They can garnish your wages at your employer, and this would be highly embarrassing. It might impact your ability to get a promotion or get opportunities at other jobs. So don't let that happen. What are some of the mistakes people make when they're setting up a payment plan? Well, one thing is you have to be current with all your tax filings, first of all. And when you set up an installment plan, it has to cover all the debt that you owe to the IRS. You just can't cherry pick the years. The biggest mistake then is to not make the payments. If you fail to make a payment to the IRS, they'll write you a letter and say, that was really bad of you. You better not do it again. You fail to make 2 payments to the IRS when you're on an installment agreement, they will cancel the installment agreement. They'll assign a revenue officer to come after you and shake you down for the assets. And the IRS can do some really harsh things in terms of seizing assets and wealth or to pay off the debts. So it's far better that you take the initiative than making them come after you. The IRS charges a fairly reasonable rate on their installment agreements. It's a simple installment agreement, and it's far lower than your credit card rates, but they think they should be the first ones paid when you get paid. So treat them right, and they'll keep your life from becoming hell. If you have trouble with making your payments, please contact our office. We can have a personal consultation to advise you on what your best plan is for moving forward. I hope you enjoyed this information. Please like, subscribe, and follow. It helps us get important information out to others.